How's it going, everyone? Another day, another earnings week. These are the stocks to watch for the week of March the 11th. First, a recap of how last week went. Target blew the analysts away with their earnings, and as a matter of fact, they're launching a membership plan called Target Circle 360 for $99 a year. Investors are eating it up. They're up by 15% since reporting earnings. And I made a video about Target last year when they were going through a massive sell-off. And when I looked through their finances and balance sheet, I saw an undervalued company that was going to recover. And lo and behold, they have bounced back. And as expected, First Watch Restaurant reported better than expected earnings, and their stock is on the upward trend. Once they start paying a dividend, I might be interested. EVgo reported good earnings, but the stock price is still flat. ChargePoint, on the other hand, did not have a good earnings, and their stock price is flat, which is to be expected because both companies need a low interest environment to thrive. Unfortunately, I don't see them doing too well in the short term. Campbell actually beat revenue and earnings per share estimates, but their stock price is still slightly undervalued. Not a bad, safe consumer company at a very cheap valuation. ABM did really well, and their stock only went up by a little bit. And the last I checked, their stock is actually going down now. I still think as of right now, ABM is a better value play on trash management than Republic Services or waste management. Now here's the crazy part. What is shocking is Costco actually missed their revenue expectations because they miscalculated their holiday forecast. Especially with their PE ratio, they should not miss their revenue expectations by $500 million. Costco's positive call out was that e-commerce sales went up by 18.4% year over year, but I think it's an optimistic point to make because if Costco consumers are buying a TV off their website rather than in the store, then it makes no difference to me. Just like when Disney launched their online streaming service, investors on Wall Street were going crazy, right? They were super bullish on Disney, but what they did not understand is that the customer base were going from paying cable bills to watch Disney on TV to now just watching it on their computer or streaming platform. So the money revenue didn't really change. It just went from one pocket to another pocket. So this is absolutely weird for me to even say, but I would not get excited on Costco's call out about their e-commerce going up. On that note, I think Costco is way too expensive for me to buy. Their valuation and stock price is just too much. You heard it here. There are better opportunities in the market. And finally, Kroger had a really good earnings report, but let's be real. That's because of inflation prices and a jug of milk costing your left testicle. Otherwise, they announced they are not doing stock buybacks because they're going to make sure that the Albertsons merger goes down. They're not giving up yet. So there's your summary of how last week went. Now let's look forward to what's happening this week. On Monday, we have Asana, which is a project management and collaboration platform. It allows multiple teams across different business segments in a company to be aligned on a project timeline, deadline, and to work together. Personally, when I was a consultant, I preferred Monday or Trello as it has a more clean, simple layout. If you are a project manager, you know exactly what I mean. Then there's also Mission Produce, ticker symbol AVO, and they sell avocados. No, I'm not exaggerating. Is it fair to say that Monday is a very boring day? Yes, there are other companies posting earnings, but none of them are on my radar because they're mostly speculative or just not good businesses, or I just don't know too much about them. What about Tuesday? Well, Archer Daniels Midland is reporting, ticker symbol ADM, and they're in the farming commodities business and producing high fructose corn syrup. In a very simplified sense, their stock has been beaten up badly this past year because they have a lot of headwinds headed their way. First, the SEC is investigating their finance department for fishy accounting. That in itself is a huge red flag. However, the bigger concern is their declining top-line revenue and profitability because of inflation and whatnot. Regardless, this is a company I will be keeping my eye on. Their trading multiple is at a historic low. ADM has not been a single-digit PE ratio company in years, in over a decade. If their stock price reaches the sub $50 range, like say $49.50 or even $49, that would seem like an opportunity to me. But we'll see what happens. Also on Tuesday, Manchester United, the Premier League football club, will be reporting. They've been having a rough season this year. I have no room to talk, as the team I support is Tottenham Hotspurs. And you know what? The boys are healthy now, and I think we have a legitimate shot at finishing the year on a positive note, maybe even securing a Champions League spot. On that note, does anyone else watching this video actually follow football? Let me know. Other than that, we have Allbirds reporting their earnings. And to be quite frank, I am bearish on this company. They're in the business of manufacturing shoes made of sheep wool. It's not that I don't like the company, but I just don't think they have a bright future, right? With the operating costs and how there's just so much competition in the shoes industry. Don't get me wrong, I like what Allbirds is all about, right? And I really appreciate their mission. It reminds me of Tom's Shoes, clothing with purpose. But when it comes to a company with real operations and finances, I would not be thrilled to be an investor of Allbirds. Give them 5 years and they might be okay. But in the short term, for the next year or so, I don't think people are going to be paying over $100 for sheep wool shoes right now. Also on Tuesday is Purple Innovation, which sells beds in a box. You essentially order the bed online and they ship you a king-size bed right to your doorsteps. And what differentiates Purple Innovation is instead of using memory foam for their mattress, their beds actually use an elastic rubber material that is kind of like a gel shoe insole. I will admit, their beds actually look very comfortable, and it should be, right, for the price tag of $1,000. This is sadly an example of a business with a really good product, but a terrible, ugly stock to reflect it. Let's move on to Wednesday. We have Dollar Tree reporting, and they're in the business of selling affordable everyday items. My family and I actually buy our random cleaning products from Dollar Tree. Not only that, if we need random stuff like thumbtacks or snacks, it's honestly not a bad place to go. The Asian equivalent of Dollar Tree is Daiso, and that place is actually good as well. I think because of inflation, the consumers have been gravitating towards Walmart and places like Dollar Tree more frequently than in the past. So I think Dollar Tree will do well on Wednesday. We'll see. Then we have Petco, ticker symbol WOOF. That, my friend, is smart marketing. It's a pet store, right? Petco sells pet food, live animals like hamsters, fish, reptiles, and you can even buy a sweater for your dog. To be honest, I always preferred Petco to PetSmart, but am I bullish on the company Petco? No, I am not. I think most people just use Chewy.com, Amazon, or even BarkBox instead of going physically into a Petco store. During the pandemic when they went public, it was a smart move as everyone was getting a pandemic puppy or a cat. Their business did really well. However, since then, their company has just been struggling with operating costs and profitability. And if you look up Petco right now, their stock price is almost a penny stock. Let's move on to Thursday. Dollar General is reporting. The best way to describe Dollar General is if Walmart and a convenience store had a love child. They mostly operate in super rural areas where there are no grocery stores or Walmarts nearby. And I know the name implies that most items are going to be $1 or less. However, if you actually go into a Dollar General, most of the items are like 10, 20, 30 bucks even. It's not that cheap. And because Dollar General mostly operates in food desert areas, I'm talking about like the mountains of West Virginia and the swamps of Louisiana, they usually only have one employee running the store. So the shelves are always a mess. The customers are always pissed off because there's a slow moving line and their company is just not as efficient as Dollar Tree. That's just my two nipples. I've never had a good and fond experience whenever I walked into a Dollar General. Then there's also Ulta Beauty, which if you're not aware, they are in the retail business, and inside their stores, they sell makeup, skincare products, and other beauty goods. I am not bullish on this company at all, because if you're familiar with the skincare industry at all, the Korean products are taking over the world. So more and more consumers are ordering Korean toners, essence, serums, and moisturizers over the American ones from Korean modalities. And a little fun fact about me is that I used to be a model, and some of my most favorite gigs was to be a skincare model. So they would apply skincare or makeup on me, take a lot of photos of it, and because I was involved in the industry somewhat, I understand the implications of Korean skincare products dominating right now. There's also Adobe reporting on Thursday, and they offer products for the creatives in the industry of video editing, photo editing, and I predict they will throw around the word AI a few times to keep Wall Street happy. Adobe is not a bad company at all, so I think they'll do just fine. And honestly, they ought to introduce a dividend. And on Friday, there are no good companies reporting. So there you have it, folks. Nothing too crazy this week. The only company I would keep on my radar is ADM. If you enjoy this type of content, please be sure to subscribe so you can see next week as well and see how things folded out. Dividend Compounders with Cheese signing off. Stay safe, everyone.